bit from now. But let's talk about Dixon Technologies, right? And of course, the entire sort of Make in India theme. And Dixon really has emerged as the poster child of that theme over the last couple of years now. Stock's done fantastically well. I don't think I need to repeat some of the stats here. But what next is the question. Lots of newer deals, both on the mobile space, but also other segments have been struck. We hear a deal almost a month. We have Mr. Atul Lall, Managing Director at Dixon, joining us now. Mr. Lall, great to have you with us here. Thank you very much for your time. Prashant this side. Typically we'd start these conversations with, by asking you about the latest sort of customer that you've onboarded and signed on. But I want to start with asking you to reiterate some of the numbers that you've guided, because now expectations are running pretty high, Mr. Lall, for Dixon. The full year FY25 top line guidance now is about 32,000 crores from the last time that you spoke to us. Is that very much doable, or where are we on that number? If you can start with that.
Thanks, Prashant, for having me here today. You see, we are not giving any guidance on numbers for the last couple of years. However, please be rest assured, the order book is extremely healthy. The growth is going to be extremely aggressive in the current fiscal. Mobile is the largest trigger of our growth. We are sitting on almost 50% of the Indian Android ecosystem capacity. New acquisition is going to kick in once we have the CCI approval of iSmartU. So a lot going on the mobile side. We have launched our refrigerators. The commercial production has started. Order book is very, very good. In telecom space, it's going to be almost 200-250% growth in our JV with Airtel. We have added new products in fixed wireless devices and also the routers. So order book is very good. And I'm not commenting on any number, but would like to assure all the stakeholders that we are on a good path.
And got that, Mr. Lall, the stakeholders are all penciling in 32,000 crores. So, I think from that answer, I can take away that you're confident that you'll do that. I just had a question before we'll get to individual customers and people you've signed on, etc. Typically, you would get your clients, your customers, mobile phone manufacturers, etc., would give you a production schedule, right? This is what we want to sort of, this is what we'd be able to sell in the market for the full. It would be a 12-month out kind of a plan, but then ordering will happen closer as sales actually take place in the market. Is that how it would work? And I'm just sort of going back to the point about execution. Is all of that also on track? And whether the orders come or not will depend on whether the mobile brand, for example, in question is able to sell the mobile phones in the market, how their market share shifts, competitive intensity, etc., etc. So just a quick word on that, sir. Execution and how is it going?
So undoubtedly, the order book in mobile is very healthy with new customer acquisitions. I think in another 30 days, we're going to announce our first quarter results. The stakeholders and yourself would see how the numbers look. There is going to be a significant growth. The team has done extremely well in ramping up the execution. And we feel that in mobile, we should be touching 28 to 30 million units in the current fiscal. And the execution is going as per plan.
All right. Hi, Mr. Lall. Good morning and good to see you. And so 20 to 30 million is what you're looking at in FY26. I think you were guiding for a 20% growth on that 30 million number, right? So 26 should be 35 to 40 million?
That's what we are planning.
All right. Got that out of the way. Well, let's address the latest piece of news then that came in. You've entered into a term sheet with HKC, to form a JV for manufacturing and sale of products. Give us a few details. What are the synergies and what are the revenue targets you have with regard to the signing that you've done?
So this is an extension of what we are doing to start with in mobiles and also in our IT products, namely notebooks and tablets. We have a very large scale now. And as a part of the strategy, we want to go in for the backward integration to create more value. So this JV with HKC, which is one of the largest global players in glass and display manufacturing, is going to fructify in next 8 to 10 months. We have yesterday submitted our application for a Press Note 3 waiver. So in the phase 1, we're going to set up a manufacturing facility in Noida, Greater Noida, for manufacturing 20 million mobile displays to start with, which would be largely for the captive consumption. Then in year 2, it's going to be doubled to 40 million. And also we're going to add line for display of laptops and tablets. That's the plan. Please appreciate a display constitutes almost 8 to 10% of the bill of material of mobile. So that's the enhancement in the value addition we are planning. And we feel that with 20 million units, the revenues to be generated are going to be almost 2,500 crores. And this is our first foray into the component space, which we're going to pursue very aggressively otherwise in the non-semiconductor component space. And it's going to be significantly margin accretive.
Okay, significantly margin accretive. That was my next question. Because I think, Mr. Lall, we've tracked your company for so many years now. And the one problem that the street has is when the revenues are growing so much, why are the margins still in low single digits? But of course, I understand that the industry works differently. But from this 4-5% margin band, when you say there's significant accretion margins expected, how much do you think you could take it up to?
So this is the first significant step that we have taken in Dixon. The large part of growth, Sonia, is coming in from manufacturing of mobiles. So mobiles manufacturing is globally, and so is the case in India, a relatively lower margin business. So that lower margin business equation would be much more loaded in the growth path. So with this, some blending will happen. Numbers to share at this stage that how it's going to pan out will be slightly difficult. But please be rest assured that this business is significantly margin accretive and it help us in inching up.
Okay. We always talk about the here and the now, right? But the larger overarching theme, not just for your own company and industry and for India, is India manufacturing for the globe. And that's something that has been a huge growth trigger for you. I mean, in the last, I think 1 year or so, you've had significant clients from across the globe, whether it's Xiaomi, Realme, itel, Compal, etc. I want to understand from you, over the next couple of years, are you expecting to sign any more large orders? Is there anything in the pipeline from larger global brands that you can unlock in terms of, even value for shareholders?
So let me just share with you some numbers from the industry's perspective and Dixon's perspective. Please appreciate industry closed at almost $100 billion. And out of that, the EMS industry share was almost $20 billion, 20%. And Dixon's share in the last fiscal was around $2.2 billion. So we are almost 11-12%. The industry is expected in India, the electronics manufacturing industry, to touch almost $300 billion by 26-27. And usually 20 to 25% is the EMS portion there. So here we are talking about almost $70 billion of EMS opportunity. And we are going aggressive to ensure that we have that share on which we are sitting today in the coming couple of years. So that means scaling up the business. Now, what is the largest opportunity here? The largest opportunity here is mobile phones, the smartphones. And we are sitting on almost 50% of the outsourcing opportunity. That's the kind of capacity we have created. And practically all the major brands in the Android ecosystem are our clients now. So we feel fairly confident that the growth is going to be aggressive. Now, coming specifically to a question on client addition, yeah, that's an extremely important, because that's how we grow. So we are going to be concluded another important client in the smartphone category. We have also tied up with a large global brand on the IT products. That's going to be, so these two things, these two sectors are going to be the growth trigger, apart from our telecom devices, refrigerator, and new business. So that's what we are planning. And customer acquisition is the key input, the key strategy for that.
Right. Mr. Lall, just a couple of questions. Now, in the mobile segment, you were already working with players with, I'm assuming, 60-65% share, if not more. You already have that those tied in with you?
Yeah, so when I see all the top 7-8 brands in India in the Android ecosystem are our customers.
Okay. Stop 7-8. Okay, got that. Now, I was just sort of asking because you said there's another client which you're going to onboard, right? So, but the top guys are all there already in that sense. That is one.
That's right.
But you said that on the IT product side, that is the other kind of growth driver, where there is still room to grow in terms of signing on newer major clients, right?
Yeah. So we already have 2 large brands as our customers. The commercial production is expected to start sometime in September. We have taken a decision to set up a large campus down south in Chennai, in which the IT products is going to be expanded. Apart from our foray into industrial electronics and automotive electronics, that campus should be ready in next 10 to 12 months. We are in final stages of negotiations with 2 large global brands in IT products. Hopefully, I'm fairly confident that it's going to be through, and sometime in next fiscal, those products, commercial production is also going to take off.
I just one clarification. The screen tie-up with HKC, it's all going to be used in-house for what the mobiles that you produce, or you're going to sell it outside as well?
So Prashant, initially is going to be for captive production, but it's going to be to all the other customers also, and all the other manufacturing footprints and partners of the customers.
Okay, all right. Very quickly, Mr. Lall, before we let you go, you're looking at new client addition, new segments of business as well. EV part manufacturing, is that the new segment you're looking at as well? Just wanted some clarity on that front because there were various reports that suggested that.
Yeah. So we are making a foray into automotive electronics.
Yes.
It requires special technical approvals of IATF. This is going to take place in the Chennai campus. We are going to be foraying automotive electronics and also industrial electronics.
Interesting. And what is the total amount of money that you'll be putting into this EV part manufacturing? And by when can we see some revenues?
So those numbers are going to be are getting worked out. We feel that sometime in next fiscal, that business is going to take off. The teams have been placed, and also we are seeing a positive traction from the customers.
Okay, so growth is like firing on all cylinders. Next fiscal, the EV business could take off. And what about telecom? One final question from mine, since my colleague was asking you about different product segments. You have a facility, another facility in Noida that has started mass production in the telecom space. So I want to understand, how are you planning to scale it up further?
So Sonia, this is our JV with Airtel and their customers. We had a revenue of almost 700 crores from business. And we have been manufacturing routers and also set-top boxes there. In this business, we are really ramping up. We are a PLI beneficiary here. We are having a very aggressive target of growing from 700 crores to almost 2,300 crores. We have now added new product range of fixed wireless devices, access points, IDUs and ODUs. So this business is also going to grow very aggressively. Normally, I don't share the numbers, but in this telecom venture, I'm sharing with you that the target plan for this year is to grow from 700 odd crores last fiscal to almost 2,300 crores in the current fiscal.
All right, Mr. Lall, we'll leave it there. Thank you very much. And, I'm sure the numbers are going to be fantastic. You gave us a sense that we will see Q1 shortly, and there has been significant scale up and ramp up. So look forward to our conversation after the results, which should not be very far away. Thank you very much and good luck. That's Atul Lall, Managing Director at Dixon Technologies, with some perspective on how things are looking. We'll take a quick commercial break here. Markets